Snapchat stock is getting crushed in the after hours. Is this a preview of what we're going to see next week when Google and Meta report to their earnings? You better hope not if you hold those stocks. We'll talk about that and more on today's show. What is going on, investors? Hopefully, guys are doing well out there. If you own Snapchat stock, a moment of silence as you're losing over 26%, nearly 27% in the after hours. Over the last year, you've lost 85% year to date. You've lost close to 77% on this stock. Tell you what, if you've held this through those dips, tell you what, maybe let this be a lesson of just maybe cutting your losses at some point. We'll get into the Q3 numbers over at Snapchat. Take a look at the revenue. They talked about how they did not give guidance for the upcoming Q4, but if you dug into the shareholder letter, there was guidance for the Q4. We'll talk about that. We'll talk about the numbers. We'll go through the lack of profits, which has always been our problem with this stock. This is dragging down the other social media names, the aforementioned Googles and Metas, but you're also seeing Snapchat pull down the likes of Pinterest as well. And I believe this happened a quarter or two ago where Snapchat put up an absolute stinker, and then a stock like Pinterest, which actually generates profits, at least to a small degree, actually surprised investors. We'll see if that happens again. I think Pinterest reports here very soon as well. We'll also look at this from a technical perspective. Obviously has fallen off a map, but has fallen into an area where you'd expect some demand to show up with the shares. Whether or not you have the cojones to step in on this stock really is up to you. Revenue came in the most recent quarter, the Q3, at $1.13 billion. That was just 5.6% year over year growth. And if you have no interest in Pinterest, but you have interest in a lot of the other high flying stocks, some of them that we cover here on the channel, certainly like a Tesla, certainly Netflix in the past. Meta has suffered similar fate to Snapchat. When you are priced like a growth stock and then all of a sudden you go down to single digit growth, well, your stock is going to be hammered. The Datadogs, the Snowflakes, all of the Cathie Wood ARK stocks have suffered this over the last year or so to a certain degree. And this is the risk that you have when you buy these high multiple, high beta type stocks. When the growth rate gets sucked out of them, particularly in the case with Snapchat, the fact that it doesn't even have profits to back up against, well, you are going to get obliterated and the stock is going to get obliterated. So lesson number one, I don't care if you buy Snapchat stock. I don't care if you buy Tesla or Datadog or Snowflake or any of these other high flyers. But I believe the most important thing is number one, recognize some profits when these stocks go on these monster runs. Go ahead and recognize some profits, but also do not be scared to get out of these stocks. Well documented here on the channel that I got out of Meta. I got out at Nvidia this year as those stocks started pulling back. I took my profits and I got out, and I'm probably going to get back into both of those names. In fact, I'm back in Meta already. 5.6% year over year growth. That missed expectations. Expectation was closer to $1.14 billion. So didn't miss it by much. The high end estimate was close to $1.2 billion. The key though was, and I think what's having this stock really fall is, look, in the press release, they said, given the uncertainties related to the operating environment, we are not providing our expectations for revenue or adjusted EBITDA for the fourth quarter of 2022. So in the main press release, they tell you that. But interestingly enough, you dig into the press release and they gave you their guidance for the fourth quarter. Now, it's a really odd guidance because they tell you initially, thus far in Q4, we, referring to Snapchat, have observed revenue growth of approximately 9% year over year. So they're a few weeks into Q4 and they're seeing 9% year over year revenue growth. But then they go on and on and on. And then they say their internal forecasts are based on the assumption that year over year revenue growth will approximately actually be flat for Q4. So the first couple of weeks of October are actually pretty good for Snapchat, experiencing 9% year over year revenue growth. Wall Street for the entire fourth quarter was expecting about 6.5% growth, but they're saying that top of the funnel advertiser, the McDonald's, the Chipotle's, the Pepsi's, those types of advertisers, the Nikes that do a lot of brand advertising, not necessarily targeted marketing like you see on a Google and certainly Meta's platforms as well. They're believing believing that advertiser is going to pull back towards the back half of Q4, and that is what's going to have their revenues essentially be flat year over year. So they're going to miss this expectation of about $1.38 billion in terms of revenue estimates for the Q4. Again, that was 6.5% growth if they hit that. So they're actually going to come underneath that number and really sequentially be almost flat from a revenue perspective as well. So very, very bad news. Now, the other little bit of good news for Snapchat is they're seeing daily active users, especially in their key markets like North America, Europe, rest of the world. They're actually seeing a little bit more engagement. They're just not able to back that up with advertisers and ARPU to go on top of that. Now, they also authorized a share repurchase program of up to $500 million of their Class A stock, which we'll see in a minute when we get over to cash flows with this company, is just going to barely offset the stock-based compensation that this company generously awards executives and many of its employees. We talked about how at the top, Google's down about 2% in the after hours, Meta down about 4% in the after hours. Twitter obviously has an open standing bid that might get closed on Friday. And I think we can pull up Pinterest as well and see how that's reacting in the after hours. That one's down 7.5% in the after hours. So Snapchat's earnings certainly, and their commentary, I think particularly in this Q4, the fact that they buried it in the shareholder letter, where in the press release they said that we're not giving guidance, but they actually did. I think that is spooking investors quite a bit. Not a lot of transparency over at Snapchat. While I admire Evan Spiegel, who we have here, I don't admire his ability to communicate with shareholders. He's had many blunders over the years, and this certainly is another one that takes the cake. Revenue coming in at that $1.128 billion, up just fractionally over a year ago. But what's not up fractionally is your total cost and expenses. They went from about $1.25 billion up closer to about $1.56 billion. That accelerated your operating losses. Last year, you lost $180 million. Now you lost $435 million. Now, from a balance sheet perspective, this company can absorb these losses, because when I get over here to cash flows, I'll show you the vast majority of those losses are absorbed by stock-based compensation. Company has plenty of cash. There are some liabilities, but not a lot. You only have about $5.4 billion worth of total liabilities, and you have about $5.5 billion worth of total assets on this company. Again, it's an asset light kind of business model, obviously, and you see it when we come up here to cash flows. Here's your net loss of $360 million in the most recent quarter. Last year, you were just at a $72 million loss. Now, thank goodness you get to add back in stock-based compensation dollar for dollar. In the most recent quarter, coming in at $342 million. So when they announce a $500 million stock-based compensation buyback, it's barely offsetting what they do in a quarter. You see, over the last 9 months, they've enriched themselves with over $937 million worth of Snapchat stock. So a $500 million buyback is not really doing a whole lot. It's essentially just a creative accounting way where they can continue to pay employees and executives with stock-based compensation, make their cash flows look good, make their balance sheet look good. And then what they do is now they're going to have to go into their balance sheet and actually pull out $500 million from here and actually recognize it in the form of a share repurchase program. I think the SEC should change the rules. I don't think you should get dollar for dollar on stock-based compensation. I don't think you should be able to subtract it at all. But until those days happen, I guess some investors will be fooled by the fact that this company does have positive cash flows from a quarterly basis and a 9-month basis of about $56 million. Last year was actually a little bit better than that, at about $71 million, primarily because they had a far less of a negative net loss that they reported, just $72 million versus $360 million loss this quarter. Everything you see here is a complete disaster from a financial perspective. The revenue growth rate is gone. When we come over here and look at it from a revenue estimate perspective, we cannot give them credit for 6.5% growth in the upcoming quarter. It's probably going to be 0 or a small, very small single digit. I don't see how in Q1 it's somehow going to reaccelerate. and then somehow in Q2, Q3, and Q4, it's somehow going to magically reaccelerate to high teens, almost 20% growth. Certainly you're comping against lower numbers, but if we go into a much deeper recession, if the markets stay lower for longer, if interest rates continue to climb and they hold them there for a longer period of time, there's absolutely no way this company is going to generate double-digit growth into next year. This is one example, and we're seeing it across a lot of the stock market where the analyst estimates just haven't come in quite enough. And certainly when it comes to Snapchat, just clearly not there. These top of the funnel type of advertisers as well. The first place they're going to pull back is on the Snapchat, is on the Pinterest. This is why I'm not too alarmed with the performance that we're seeing over at Google. Obviously, we'll get an update on their business next week. I believe that's on Tuesday or Wednesday. We'll also get read on Meta. I believe their earnings are on Thursday. Certainly, they are impacted by small and medium businesses starting to pull back on their spend a little bit. But Snapchat's advertisers are so specific, you don't actually get a lot of small and medium-sized businesses advertising on Snapchat. So when the big guys pull out, well, we see what happens with the stock. Now, from a technical perspective, it looks really ugly. I put a fake red candle here because earlier in the day, we were trading we closed at 10.79. Now we're down here at about $7.90. The stock actually bottomed out there during those March 2020 lows. There was also like this little gap that we created. This was back in 2019. So this level where the stock is resting literally basically to the penny at $7.90 in the after hours is a area of support. Wouldn't be one that I'd be really excited about. I think the momentum is completely out of this name. And certainly if you're bearish these markets, I think you retest the lows that we made back here in 2018 south of, yes, $5 per share on this one. That would take you into a single-digit market cap with this company. And at that point, you might actually have a little bit of value with this one where you're generating, we'll call it $5 billion worth of revenue, and you're trading maybe right around 2 times sales, maybe just slightly less than that. You're not generating any meaningful profits, but the recovery, okay, if you think a recovery is coming in the back half of 2023, if you're thinking it's coming back in the first half of 2024, well, a beaten down stock like this, well, absolutely, you are going to see a big, gigantic move back up as advertisers start to come back. They start to advertise at the top of the funnel type places like a Snapchat. Just make sure, like we said at the top, you take your profits in this stock and you cut your losses very quickly. Any of these speculative non-money making stocks that really only show positive cash flows because of the stock-based compensation, dollar for dollar add back when it comes to cash flows, I would take my profits on these types of stocks. I would cut my losses very, very quickly. Not a stock I'm looking to get into anytime soon, but this is one we'll keep an eye on, and we'll definitely kind of a bottom feed on this one at some point. I think you can bottom feed on it and have like a 30 or 40, 50% rally in a name like this. I don't think it's going to come anytime soon. If anything, it should pull down the Googles and the Metas and probably give you a better buying opportunity for companies that actually have positive earnings, positive cash flow. In the case of Google, a mountain of cash. Hopefully, guys, enjoyed today's video. We'll be back in soon with more. Good luck with your investments.